Broadcast. Welcome to episode number 21 of the Zaner MarketCast, your one and only spot to keep up with all of the agricultural market news. I am Joe Nikruto here at Zaner Ag Hedge, and I'm with
Dan Hussey, another senior market strategist over here, getting ready to break down this week's price action with you.
Dan. How you doing?
Good, Joe. How about yourself? It's been
really
interesting week.
Big week. Taking brilliant, bold young daughter to college on Saturday. That's going to be crazy. I'm going to lose my mind. I'm going to be signing off. This is my last podcast ever. I'm going to move to that college town and just sort of wander the streets to make sure that she's safe. So I want to bid you and all the listeners farewell.
Well, enjoy Michigan. Enjoy the great wide north from Indiana there. We'll miss you, Joe. No, but wow, both of us going through interesting, little life, I don't want to say hurdles, challenges, right? But just impasses in life, right? Forks in the road. I've got my second on the way. We're ready to pop like hours and days away from having my second. So it's going to be an interesting end of the year for both of us, I think.
It's going to be something. To that
nobody cares about. Nobody cares about our personal lives. Let's talk about the most.
To that end,
more important.
I was able to concoct using the Busch Light farmer's corn can version of Busch Light last night. A fine recipe to help me through some of my personal life challenges.
Is that recipe going to be made available to viewers? Because I feel like if this was so good,
can we get Carter? Yeah, can we get Carter to post it? So easy to remember, super easy to remember. It was frozen chunks of watermelon, some Busch Light from the can, got to be from the can with the corn on it, and then some jalapeno that was given to me by Adam here at Zaner, and then some a little bit of squeeze of lime. Put that in a Ninja blender, single serve, zip. Next thing you know, you've got some really tasty watermelon, lime, jalapeno, Busch Light smoothie. And normally I wouldn't mention my vices on a podcast like this, but I think it was more.
Sir, that is not a vice. That is a treat, right? I mean, that is not
with the vegetables and the fruit.
Delicacy.
I think it's probably more of a health drink. You might want to call it like a healthy smoothie that I was able to fuel the remainder of my evening and a good part of this morning with. And so I'm just saying, it's not for everybody. We certainly understand that not everybody.
No better way to end the day, it sounds
exactly. So maybe if you're going to keep the Busch Light part out, but something about those frozen watermelon chunks makes me believe that I'm going to be checking that out again. I'll tell you, Dan.
Wow, that's That's an interesting recipe. I'm short on the Busch Light, but I definitely have the watermelons. I got 4 of them going in my backyard right now. Hopefully a few more. I got a whole watermelon patch.
Just a look off to the left here says that we may be in possession of at least 4.
I'm aware that we at Zaner Ag Head have quite a position in Busch Light, though.
Definitely long Busch Light. So if you've got the watermelons, we might be able to do some work here.
That's what I'm saying. I think, and if Adam's got the jalapeno, I got your watermelons covered. We got the Busch Light sitting. I mean,
we got to get a lime guy.
I'm thinking
if anybody out there knows a lime guy,
lime guy away from getting the band together.
It was just really
having a whole
delicious.
Team.
Really delicious.
That sounds amazing.
How about enough of my shenanigans, and we'll jump right into the numbers, and then we'll talk about a story, and then if you think it's right, we'll talk
get to those numbers everybody wants to hear, right? Those crop tour numbers at the end, but yeah, get us started here on the week. Corn, it looks like settled down. Beans might have been up. Am I guessing right? Just where am I balling
Let's
things?
take a look. D's corn opened the week at 392. The high was 401. Low 390 and 3/4. Last trade I saw D's corn 391. That was down like 1.5 on the week. Funds coming into the day, ADM IS estimates funds short 257,000 contracts. Today could not get over the 10-day 397. You've got the 18-day where?
18-day. Are we talking D's corn?
D's corn.
Yeah, at 308, I call it 308 half. It was basically highs, or 398.
398, yep.
Yeah, highs of yesterday is where it was yesterday. Today it dropped a little bit with lower price action, but that 18-day moving average has been the story of the week for the technical chart of corn. We've been dropping every rally, I should say, has been faded off of that level since the start of August. And there's been this trend line that correlates with that 18-day moving average. I've seen this movie before. I know how it ends. Usually, it's a continuing downtrend, until it's not. That pattern's there. It's an algorithm. It's whatever you want to call it. But every time we get to that 18-day, it gets faded. And here we are.
Call it a turn. Let's say it does
lows.
turn and we come off the contract lows and we do start closing higher. What's it got to close above? So you got 4 even that looms large overhead. We cannot seem to get over that, let alone the 10 and the 18-day moving average. But what does it got to be, like 405, 406, some closes over that before we consider? A lot of guys probably looking at those levels thinking, okay, if I have sold massive amount of corn coming to market this week, next week, the previous week, the week after that, just a lot of corn moving. If guys are thinking about re-owning it, you probably got to see it close over what level would you say?
I mean, honestly, I'd have to see it as high as 410 perhaps at this time to feel really, really, really comfortable. And that would get you back into not necessarily a close up there. I want to see the market get up there. I guess a close above 405 would make me a little more excited, but 410 is the highs from the first week of August. And that was the first test of the 18-day moving average. So that would unwind the whole downtrend. 405 here would, maybe even $4 would unwind the most recent tests of that level, right? So watch that price action as we get back above if it does get back above $4, right? Watch for that price action, how it behaves between $4 and 405. If you're seeing that strength and we're starting to get through maybe that momentum as it goes through from 405 to 410, that becomes your signal. And then, hopefully you're long by the time we're closing back above 410. But if we're talking a true reownership strategy, right, that is going to take you between now and July, that 5 cents down here shouldn't be our concern, right? It's almost safer to wait, in my opinion, for that 411 close because we're looking for that move to 450 to $5, right? And it's not going to happen in a week's time, or it likely won't, right? So
you would say you don't feel very strongly about having to be in to win on a short covering rally or something that turns the market. It's difficult down here to figure out what it is going to be that turns it, but
right. I'm saying that we just don't have steps 1 and 2 that have to happen before we start talking about a long. We're just testing contract lows. If anything, we should talk about where are you short from and what is your downside target, when you're in a downtrend like this, right? I'm just saying, what's the level? And I think you were asking me, right? What's the level if we close above it? Are we starting to reverse that trend, right? 405 to 410, definitely where I start to get interested in saying, hey, maybe that weekly downtrend is starting to reverse. Daily wise, we're in a tight range in corn. I mean, we've been trying to basically a fight to stay below $4. And I don't deny that we've got enough shorts in this market, right? The fund short, there's enough shorts in this market that once they start to cover, this will be like trying to hold a beach ball down, for a little bit.
Sure.
Underwater, right?
Underwater, absolutely.
But for the time being, right, while we're below that 18-day, that 18 days the really the course corrector at all times for me, and it's one that I look at with almost all my clients all the time for our strategies just like this. Don't put that reownership on until you have a close above the 18-day. It keeps you out of these big downturns more times than not.
How about beans? We opened the week at 957 and a quarter. The high was 985 in November beans, low 957 and a quarter.
Mm-hmm.
Last trade I saw was 973. That was surprisingly, and I had to look at this twice, that's up 16. Funds are short 176,000 contracts, up 16 on the week. Am I right about that? So inside week, but still what caught my eye, and you talked about this, 18-day moving average, 993. Beans did not take out yesterday's low. Beans did not take out last Friday's low. And so you have a new technical fact, right? You have a new higher low on the chart. We made a low.
Yeah, you also have lower highs, genuinely speaking, and still in a
which could
downtrend,
speak to consolidation, right?
100%, right? You take a little step back here, and this looks a little bit like a bear flag right now. Could it be building of support and a rounding bottom that we get through that 18-day and you start to see short covering? Absolutely, right?
But
But
we
there's
talk
steps
about
that come before that.
we talk about the propensity of a market when it consolidates to continue on the statistical probability that markets continue on in the direction they were previously traveling after they consolidate, right? And so
Right.
At some point you start to look at these numbers, and we talk about this all the time, Dan, and when you're in the nines, well, but then again, we've all seen this, like you say, we've seen this movie before, and how low is too low. It's difficult to gauge by looking at that chart.
How low is too low is definitely difficult to gauge just from this chart alone. And it's one of those situations where you're down, a new low is testing contract lows. And it's kind of like where, I was looking at, not to go off topic, but October and November feeders earlier today too. And it's hard to gauge that. How far can they go down when we're looking at a new contract low? I do know that there is known resistance here at 992, right? That's where that 18-day moving average is, a downward sloping trend line that is against the highs in the chart. You'll see folks watching at home, you'll see that yellow line. It's much like corn, right? We've been in this downtrend for a little bit longer. It's a little bit cleaner, a little bit more profound that you need to look for. And that sideways consolidation can sometimes take us, instead of, reversing or heading lower, right? We're heading sideways until we hit that resistance zone and then head lower, right? Where they kind of converge on the chart. And so, okay, maybe for the next few days we head sideways, but as we'll look at in a few minutes, man, some of the fundamentals, if anything of what they're telling us from crowd tour is true about beans, I don't know.
Much like
they're going to have
much like corn, you've got that round number resistance overhead as well. That 18-day moving average, right. 992, 993,
$1,000 or $10.
$10, really, just like that $4. Those round numbers, we have trouble getting back over those round numbers for a reason. Technicians are taking a stand there. Who knows what the real story is, but round numbers tend to provide pretty significant resistance. Interesting that you should mention live cattle and feeder cattle. Just a quick look at Dees live cattle, new lows for the week. September feeder cattle, new lows for the week. 230.280 was the low this week, which took out the low from December, I believe, which was 233.05. Now that's SEP feeder cattle. A lot of people might be looking at what Nove, but the story is the same. Both weekly charts there seem to say that market could be headed lower. Nice bounce off the lows, but I'm not sure. It seems to be some heaviness there in the meats, wouldn't you say?
Yeah, I would say so too. And we have cattle on feed here coming out while we're chatting, so we can't give a insight into those new fundamentals that might be hitting the marketplace here. But price wise, it's a downtrend, and 2 days up here, 1 day up with a kind of sideways day here, does not necessarily make a reversal in the cattle either. If anything, we're right back up into where resistance would be. We're kind of today was a loss of momentum. I would have expected to see today continue higher, pull rip back through one of the level we kind of stopped at today, the highs. I would have expected us to go through and then come back down and test it as support, not get through fail to make progress higher and then settle back, in the same trading ranges and really just flat on the day. Muted response at the end of the week.
Absolutely. And that muted response has lent me a little bit of pause when I look at that chart, because I say, okay, this chart looks like both feeders and fats. Feeders are the leaders here. We say that all the time, right? But both feeders and fats appear to be headed, could be a lot lower. And then you think about the fundamentals. I'm not really aware of a tremendous amount of heifer retention. You're getting X number of thousands of dollars for that animal and people are availing themselves of it. You're seeing maybe a demographic shift here. Just fundamentally, numbers wise, it doesn't seem to be an environment where you could have dramatically lower cattle prices. That forced me to look back on the chart, and you saw what we did last year, and there was a smaller version of that here recently. They could move this thing down to, what would you say? I mean, there's some downside room here. And we talked about this last week. We said, if you're a producer, there's still time. And would you say, with where the market is now, that you feel the same way? Or can you give me a comment on the fundamental versus the technical
There's always
situation?
Still something we can do. Right. So the fundamental situation and the technical situation have been saying a little bit of an opposite thing here for a little bit. Even cash and the discrepancy between the futures and cash has gotten a little wider to the point where I know traders are starting to get rather frustrated with that. But no, I don't think it's too late to do, necessarily anything here. October fat 180 handle still holding. I still think that's a great level to protect, yourself against here, which went out the week here 180 to 250. 180 gives way, and now you're unwinding. You're going to be unwinding, considerably lower. That's breaking number of trend lines, whatever. I don't think it's too late to do anything here. Is it the, prices that you would want to necessarily sell? Not the best ones we've had, but for the time being, guys, there's a floor here that the chart is pointing at and saying, hey, be protected against, because if we go below it, the market could give back, a lot more.
Another big chunk, no doubt about it.
Right. And you look at the continuation chart of feeder cattle, we're kind of down into the similar level here. The lows of this week, I think, were a very similar level. And that could set up kind of this. It's hard to see it on any individual cattle chart because price action has just been such big ranges. You have to go back to before last January to kind of see lower prices at this point. So anyway, for the continuation chart, we go much below that 230 level, and these are coming off of continuation chart that looks at I believe a September feeder right now, right? Anyway, we go below the lows of this week. That's a neckline. We really haven't set a right shoulder, which would be about 10 points higher from where we are right now. But if we rallied 10 points and rolled back over, you got a neckline down here you'd want to protect yourself against around 235 to 236. The feeder price, I'm guessing that's just the 230 handle on the feeders, the November feeders, if you look at them out right there. So yeah, I would say that we're kind of down into that support. We've stabilized on it. We even got a reaction off of it this week. But if that support doesn't hold, my goodness.
Look out below.
Things could, yeah, technically speaking, I don't see the fundamental reason why, but you can't fight a technical trend. So, it's
that market moves.
So what we use for execution.
Speaking of look out below, wheat on the week, December wheat opened 554.5, high was 560. Low 526.25. Last trade 528 in December wheat. On the week, that was down 24.5. Funds are short about 80,000 contracts. My notes here for wheat say new lows / never going to be good again. Just looks awful.
Yeah, and we're being led by the spring wheat lower here, and I'm hearing record yields out of some guys up in the Dakotas here. Not shocked, that we finally have capitulated, so to speak, right? We had consolidation here in wheat for the last couple months. Basically, we're in a 40-cent range there, and now have broken lower. Never going to be good again.
Just horrible. And so what do we always say, right? You and I always laugh when we look at a chart or we look at the fundamentals and we can't. Well, yeah, we say that too. Yeah. But when you can't find any reason for wheat to go up, maybe we might be near. I don't know. That's not probably the most scientific thing we're going to say all day, but certainly feels like at some point, there's got to be. No, but
we are getting down to the, spring wheat, for example, we're down, 505 area, let's call it $20 to $5. We're getting down to the levels that we were at in 2020 when this entire, big rally, started. Same could be said for December wheat or, Chicago wheat down here at this 470 to 540 area. That was the range we were in, in May through July of 2020. So, to give people, the full picture of how we went from these levels to $12 and back down again here in the course of the last 4 years. It was 2 years up and 2 years down. It's right back from where we came.
That's the way it works. How about a news story?
Yeah. Well, we got, we always hate reporting on these diseases, but here, Oklahoma and Missouri report first cases of corn stunt disease, a story out of DTN. Last week, extension specialists in Oklahoma and Missouri announced the first confirmed cases of corn stunt disease in their states, making the farthest north the disease has ever been detected in the United States, transmitted to the crop by corn leafhoppers infected with one of three pathogens. The disease literally stunts corn height. Plants struggle to reach 5 feet tall, and ear development is affected, eventually leading to yield loss. Corn stunt has been previously found in southern states, including Florida and Texas. While its effect varied by region and corn planting date, yield loss was always ranged from 5 to 100%. I mean, that's an incredible. I mean,
Yeah.
it doesn't give you any idea, right? It's just, you definitely don't want to find it, is what we're saying. According to an April report from the Rosario Board Trade, corn stunt disease is not reduced by insecticide. If disease systems are observed in the field, the plants have already been affected. The best suggestion for managing corn leafhopper damage is planting corn early in the season to allow the corn plant to develop and mature before the insect vector as pathogens arrive in the system and impact your yield. So, man, that's nature always trying to get ahead of science here in what we're trying to do. And we'll see here. Well, I guess we're going to discuss right now. Not going to talk Oklahoma, but we definitely will be talking what we found in terms of yield out on Crop Tour. Our very own Ted Seifert was out on tour. Do check out our daily ag call in, where he was giving live reports from being boots on the ground from that. But he gives updates about markets every day. Check it out. Links in the comment section and provided with this. You guys all know the drill with it, but sign up for that if you haven't. Yep. Really cool, free to check out. But we got some final numbers here, Joe. State to state.
How did we get there?
Start talking about
how did we get there? We know what the final number is. Tell me. Let's pick a state.
Crop Tour numbers.
Pick a state.
Let's go east to west. Let's just start with Indiana, baby.
Gotta love that.
Your home state.
Gotta love that. Hoosier corn. They're not messing around this year, right? Let's take a look.
I guess we should start with Ohio, technically, but at the sake of not upsetting our Ohio viewers.
Right, for sure. All right, so Ohio, what do we see here? Corn, 183.29. Beans, pod count, 1229.93.
1229.
Right. So
and remember, and just before we, I guess, go on further, reminder to folks of where these numbers come from, how, what they are, and how we get there. They're not a direct, representation of what the USDA yield is, right? The Pro Farmer, we're not going to get into the fine details, but they have their own metrics with how they come up with these numbers. There's a reason they give us bean counts, or pod counts, and not a yield there. Corn yields are, of course, based off of their standardized practice of entering a field the same way every time, pulling ears the same way every time in every field. So it gives a systematic year-over-year look at how that yield on that field is changing. And then if you take that and extrapolate it out county by county and state by state, you have a yield delta or differential year over year, and from pre-tour assessments that then you can utilize to kind of guess on how the crop year over year is or has been performing. This is not a direct comparison, right, to what the USDA is going to find on their yield reports or tell us. But hey, if Crop Tour tells you it's 5% bump here and a 10% bump there, that could extrapolate to bigger numbers down the line, right?
Yes, yes. And so we have had that explained to us in person by Chip Flory himself. I'm glad that you were able to recount that, because I believe when it happened, I had been heinously overserved somewhere, but he certainly was kind enough to explain it to us. We had a question. I said, Chip, there's a lot of discussion out in the world about these results, and he certainly recognizes that. And I'm not. I certainly don't have enough knowledge to say to assign a value judgment. It's just data, right? And so he explained it to us. It made sense. There's always going to be some discussion about Pro Farmer results, always going to be some discussion about USDA results. But in this case, what we have is we've got Pro Farmer, and then we do have USDA. And in some of these cases, these numbers are a little bit different, aren't they?
Yeah, they definitely are. And remember those pod counts that we're getting from from Crop Tour here, representative of the potential for yield. The weather the weather throughout August here and into the finishing of the crop is going to really right? Put it into the top. So,
So
but
for
more
example,
pods, better chance of a yield is the idea.
So for example, with
But yeah,
beans in
differences, right?
Ohio, 2024, the final number or the number they have, pod count 1229.93. Last year was 1252.93. The 21-23 average 1193.31. So well above the 3-year average. The USDA number yield bushels per acre 59 versus 58. So they're not giving us bushels per acre here on the state by state. They're going to give us bushels per acre on the final number that we'll get to at the end. But still,
right. But if you compare that year over year pod count, right, you got to just throwing it out there, 30, right, or actually more like 20 more pods year over year last year than you saw this year. Well, that very likely would mean look at last year's USDA number. Maybe this year's going to be like a little lower than that, right? That's kind of the thought process here, folks. It's not like right. It's not that whatever that 1229, it doesn't translate to a direct yield number, right? That's the way I look at these numbers, at least, right? But USDA, maybe, I don't know. Do you think that's abnormally high, right? Are we going to hit? Are we pushing 60 bushels an acre? In Ohio, if we're a little lower on that pod count year over year, we'll see.
Yeah, we'll see. Same story with corn too, right? So you're 183.29 in 2024, almost right on the money from 2023, above the 3-year average. USDA final in the final in 2023 was 198. USDA this year has them at 188 corn yield bushels per acre. So Ohio coming in just a smidge under, in terms of 10 bushels an acre could add up. Ohio's got some issues with drought in the southeast. They've had some issues with a lot of rain in some spots. In some places it was just great. And so this is kind of what pro farmers coming up with. How about Indiana?
Yeah, and you see that number about the same year over year for Ohio in the pro farmer number, but then your USDA number is a 10 bushel difference. Really makes me wonder if this year's number isn't, light.
Somewhere
what they're saying for 24.
Somewhere that's got to be reconciled, right? That 183.29 versus their 188. That's we'll see how that plays out. Indiana, start with corn. That 187.54 is bigger than their 2023 180.89. I think that might be a record.
I think it was. I think Illinois, Indiana, and Ohio corn records. Yeah, I think our I-states all set corn records
above the 3-year average at 184.07. So 3 bushels higher, like 3.5 bushels higher than the 3-year average. But the USDA 207 versus last year's final, the 2023 final, which was 203. So that's
see, and that's something I agree with a little bit more, right? We saw a higher yield here from Pro Farmer this year, 187.5 versus 180 last year. USDA has them pegged at 207 versus 203. That makes sense, right? Last year we were at a lower number. They both went up. The USDA has them both going up the same way Pro Farmer shows them going up in yield. That's a correlation that you'd expect to see in the numbers. That's where I was saying in Ohio, there's a discrepancy there, right? That 98 from last year. If we have the same yield count Pro Farmer found this year, and USDA said we were at 198 in Ohio last year, we're not at 188 in Ohio this year. We're at 198 in Ohio this year. But, apples to apples, that's not exactly how this works.
Bean pod count 1409.02 versus last year's 1309.96. So huge quite a jump.
Beans.
Yeah, quite a jump there. USDA says 62 bushels per acre versus the 61 last year. That might be a case where they might be
low
under,
too.
That might be low, right? Yeah, they might be
right.
low. On
you're 100 pods per plant higher this year than last year, and they're saying you're only getting 1 bushel, an acre bump from that. I don't know.
100 pods per plot.
Could be low.
To say, right? Yeah, 100 pods per plot.
Yeah,
3x3 plot.
Yes,
but you're absolutely right. You are absolutely.
But yes,
right.
That's what I'm getting at, right? Yes.
So how about Illinois? Let's take a look. Illinois beans 1419.11, which is and folks we were talking to, right? Customers were saying, "What about Illinois?" And I thought, well, Yeah, of course we want to look at Illinois. It did not dawn on me that the Illinois numbers were going to be like, my goodness.
Well, it kind of did, as quiet as all of our Illinois farmers were this year, right? Guys are real mum.
Nobody's
Mum's
complaining.
the word. Nobody wanted to talk about that 12-foot corn they've got going on, right?
2023 pod count 1270.61. The 3-year average 1266.70. That's 66 bushels per acre according to the USDA versus the 63 last year. Corn, like you said, corn same way. 2024 204.14. 2023 Pro Farmer had them at 193.72. The average for 3 years is 193.58. USDA is coming in at 225 in 2024 versus 206 in 2023. So this
is where I kind of can't argue with any of that. Like it's big, guys.
That's a 20 bushel difference from USDA to Pro Farmer, right? 20 bushels.
Yeah. And hey, and there was 11 here on Pro Pharma year over year jump, right? But look, USDA is really only dragging theirs up by 17 or 19, I guess, not 20.
Yeah.
They're that much better. But yeah, a big difference between the two. But again, it's not the difference between Pro Pharma number and USDA. It's the difference between Pro Pharma year over year and USDA year over year. You want to compare those deltas, that change in the two. That is important here. And in corn, it makes sense. USDA has a big bump compared to last year, and that yield number at 225, maybe that's a little high, but hey, I think we can say if corn, fine, you're 5 bushels an acre less than Illinois, but we know Ohio's probably got to come up there. So you're going to average out in the wash, I think, somewhat state over state. But I think what it's telling you, right, is to expect year over year a bigger crop. And both the USDA and Pro Farmer are finding that information out, right? And that's the actual yield it is. That's just a throw of the dart. But being able to go out in the field and say, no, this is better than what it was last year, that's the inherent fact we're trying to walk away with.
By this much, right? So you can say doesn't matter. Doesn't matter.
We're trying to quantify.
Yeah, I get it.
Precisely. We're trying to figure out that change of how much better it was or how much bigger production is versus straight out just saying, hey, this is what the number is, because nobody's going to know what it is exactly.
That makes it simple enough even for me to understand it. Yeah. Iowa.
And pod counts, you see massive jumps there. Same difference, right? So, I would do it broken up into districts here and report over 2 days, folks.
Just the straight up Iowa numbers, 2024, 13-12-31 pod count versus 2023, which was 11-90-41, according to Pro Farmer. The 3-year average was 11-94-21, so well above the 3-year average. The USDA's got bushels per acre at 61 versus last year's 58. Corn, 192.79 versus 182.80 last year. That's a full-on 10 bushel increase according to Pro Farmer. The 3-year average 185.79, well above that. USDA's got them at 209 versus last year's 201. Is that possible that 209 is light?
Yeah, I mean, same difference with Illinois, right? If it's a 10-point bump year over year, USDA's only got them 8 points up, right? But you got them up 10 in Pro Farma. Well, if Illinois is up 10, then but the USDA is up 20 or 19, we said, year over year. So something doesn't add up there. Illinois is either too heavy or Iowa's a little too light. But again, I think they'll come out in the wash, kind of even each other out there. It makes sense seeing you up 8 year over year in the USDA and up 10 year over year in Pro Farma. That makes sense to me. Those numbers are aligning. Those deltas, the change year over year are aligning. I think we're dialed in on Iowa's numbers, which is a huge number to dial in here, folks, because we have been arguing over that number due to so many different weird weather events this year, right? No major one event where you can walk out and say, oh, that field is gone, right? But, from derecho and straight line winds to the flooding and and flooding from midsummer rains and early rains that kept us in a late plant, Iowa's been a question the whole time. It kind of is interesting to see that, in my opinion, their numbers are statistically coming in the most sound, in my opinion. So
what about Nebraska? So bean pods 1172.48 versus last year's 1160.02. 3-year average was 1150.06. Bushels per acre, USDA's got them 2024 at 59 versus last year's 51.5, right? We had a little bit of drought. We had some dryness last year in Nebraska, right? Accounted for that 51.5.
Right.
Now, a lot of that stuff is under pivots, but still, you've got some moisture there. A lot of dry areas, not so dry anymore. That 59 bushel per acre jump from 51.5 to me makes fundamental sense. 2024 corn, same story. 2023 was 167.22 pro farmer, and then 2024 173.25. So what are we going to give that a 5 delta there? The 3-year average 169.37. Their bushels per acre 194 versus last year's 182 in corn. So 12
delta there versus a 5 delta. And that's sort of the nuances of the way the two count and what they're counting. But yeah, a little discrepancy there on Nebraska's crop. Granted, it definitely is a bump year over year, but is the USDA's bump a little too high for Nebraska here? Good question. Again, I think Ohio's was a little too low. Iowa's might have been a little too low. Illinois is a little too high. So again, kind of all I think work out there in the wash in the long term, but we are seeing consistently year over year better crop than we had last year. We can at least know that yield number, so long as the acreage is the same, is going to give us a bigger production number in the end.
South Dakota 2024 bean pod count 1025.89 versus last year's 1013. 3-year average 960.42. So South Dakota, which had been also suffering last year from some weather-related issues, bushels per acre, USDA 2024 47 versus their final last year, which was 44. Corn, they've got Pro Farmer has 2024 at 156.51 versus last year's 157.42.
This one's hard to justify.
142.44 is the 3-year average. Bushels per acre. So interesting. Bushels per acre in 2024, the USDA's got them at 162 versus their final last year was 152. Pro Farmer doesn't quite see it that way, do they?
No, they have them actually almost a full bushel less versus a 10 bushel bump year over year here from the USDA. So that's actually an interesting place where there may be some extra corn on the USDA balance sheet that Pro Farmer is saying may not be there. I'm going to have to think hard as to in South Dakota why they found that, because this is one of the states where we really did find, in my opinion, a little bit more of a disappointing corn number. Minnesota as well, but everywhere else it was just pretty straightforward.
And that Minnesota number, as a matter of fact, Pro Farmer has 2024 at 164.90 versus last year's 2023, which was 181.34. So Pro Farmer at 164.90, but the USDA has Minnesota at 185.
Yeah,
final the year before, 185.
Right?
Big discrepancy. 3-year average 183.06. USDA coming in above the 3-year average. Pro Farmer well below at 164.90.
Way below.
Anecdotally, we speak to a lot of people, and especially in the northern parts of Minnesota, they've had some severe difficulty. And a few other crop tours had not spotted that difficulty, and they thought, and folks thought maybe, okay, they didn't get far enough north. And what I had been hearing about this Pro Farmer is they didn't get far enough north to see where it was really tough. But that 164 number.
Yeah, it tells you they did.
Maybe
they
did, right?
See where it was tough, right? Yeah. They got far enough to at least turn our heads, right, and say, "Hey, there's an issue. There's an issue in the Land O'Lakes."
An issue, and so beans, same story here, or rather, tale of two cities, opposite story. 2024.
I was going to say maybe the opposite, right?
Yeah, opposite story. Beans 1036.59 versus the 2023, which was 985. The average comes right in at the this year's number for Pro Farmer, 1037.70, 3-year average. USDA is calling for 49 bushels per acre versus the final the previous year, which was 48. So
a trend we're seeing on these bean numbers is those USDA numbers might be a little light, folks. We're seeing these higher pod counts in almost every single state, and we're seeing very little change in that USDA bushel per acre count. So yeah, I'm thinking that the trend for the soybean here that we've seen has been maybe the USDA is a little light on that yield, just because we've seen a year over year bump higher on those pod counts from one data set, but we're not seeing a bump higher year over year on that yield. Now, granted, we all know that pod count doesn't directly reflect yield. We know there's things that can happen between now and finishing a crop that keep yields probably right where USDA are telling us. But I do think there's room for improvement there on that yield and on the balance sheet for the USDA to raise that higher. And certainly if we see a good finish to this crop, they'll probably be inclined to do so. Corn balance sheet wise, there's some discrepancies here. Minnesota being the biggest one that maybe even takes it to the point where you're thinking, hey, maybe the USDA is a little too high on corn yields. And I can make that argument here because I'm playing devil's advocate against myself. That is a huge yield drop from the Pro Farmer Minnesota number. You know, you're talking a 17-point drop. We didn't change in the USDA at all, right? Same thing we could have said there about South Dakota, right? There's some bushels there on the USDA balance sheet that Pro Pharma is saying that, hey, corn yields may not be what you're saying they are. Now, if the Illinois, Indiana, Iowa balance sheet makes up for that, that's a different story. On the bigger, broader USDA balance sheet, but that's the number to now calculate out, right? Take those yield differentials year over year between the two. Figure out, play the game theory of how many of those bushels translate right into the data sets each one is doing, and then compare them to each other and where we might be light in the USDA balance sheet versus the other. And my opinion here, it's bean yields might be a little light because we saw those pod counts higher, state over state, year over year. Corn yields, we were able to go through and see that there were two states that were pretty well in line with what we expected, two states that were a little higher, and two states that were a little lower. My quick mental math tells me that this Minnesota number could be enough, to negate some of those beneficial yields, Illinois saw this year. And then that asks the question, do Illinois or Indiana and Iowa production offset that South Dakota number at the end of the day?
And that brings us to the numbers they released today at 1:30 Central Standard Time. That bean number, 54.9 bushels per acre,
national
pro farmer
average.
National average versus the USDA's national average of 53.2. So all said and done, Pro Farmer feels like bushels per acre nationally a little higher than the USDA at this stage. Corn,
yep.
Not the same story. Corn, Pro Farmer says 181.1 bushel per acre. USDA says 183.1. So
and it's interesting that less. when we kind of walk through the numbers there state by state, looking at those differentials, it's interesting to see the final number from Pro Pharma kind of tell us, hey, that end of year yield, they are telling us numbers that if you compare them directly to what the USDA is telling us right now, they're thinking we're higher on the beans and a little bit lower on the corn, just as we kind of supposed from the data sets. So you see there, folks, when you step through the data and you look at the number, it's just data. It's not, anything else. We used some logic and critical thinking there to think through it all. And we're coming to that conclusion of what, the data is trying to tell us.
So it doesn't necessarily leave us with more questions than answers. These numbers kind of dovetail. These numbers kind of dovetail with the USDA. With their final numbers, kind of dovetail with the USDA. Okay, but those are the numbers that they've got to after running the previous numbers through their model, correct? So they took those state-by-state numbers, ran them through the Pro Farmer modeling, and came up with that national.
And then comes up with, right, because again, a 13, 12 pod count from Iowa doesn't actually mean a yield, right? So they've got to plug it into some,
lot of
some magic statistically. Right. And that magic is the same every year, folks. And that's the idea, is that this creates a standard model every year that we can compare it to itself year over year. That's its value. Nothing more, nothing less.
That takes us to the end of the Pro Farmer section, I think. Unless there's something you think we missed, Dan. Pro Farmer is another one in the books. We got to go
another
find
one
Ted.
In the books. I think at the end of the day, folks, market price action has spoken, right? We have hunted out and continuing to try to find support on the charts. That has been reflective of the, better than anticipated yields and production. And we're getting to the close of that cycle here with harvest around the corner. So all intents and purposes, I know our team and we're starting to focus, on what's the next chapter, right? Because, hey, I'm not saying you don't get sold here and you don't protect yourself, because that's absolutely what you have to do with risk management. But, we are looking at the seasonality of this environment and starting to think about, the idea of when a harvest low could form. But we're certainly, I don't know about you, Joe, but I haven't been trying to pick that harvest low yet. And pick a bottom in these markets, right?
Question in my mind is, what do the funds do Sunday night or Monday morning or Tuesday afternoon? There are 2 or 3 trading sessions here now where they do have some ammo to come after this, I guess is what I would say. And so, it's going to be an interesting 72 hours worth of trading when we come back next week. We'll see how that plays out.
We will.
Carter.
Well, I'm sure Carter gave us a surprise, huh?
The producer has a question for you, Dan. If you could have any animal as a pet, regardless of the practicality, so it could be any old thing that you want. It does not have to be. You don't have to worry about it.
Does it have to be real?
Eating your house. What would that animal be? I'll give you a chance to continue to think. Here's what I'm saying.
You got one? One?
Yeah, here's what I'm saying in my mind is that if Mike Tyson can have some tigers, I wouldn't mind having a tiger. I have seen
Joe the Tiger King.
I have seen tigers
up
close
the chat?
In Michigan City. There's a small ghetto zoo in Michigan City. No offense to the zoo people in Michigan City, but they actually have tigers, and there's the only thing separating you from the tiger is some shrubs and then a chain link fence. And you walk right up to those tigers and they walk up to the chain link fence. And man, oh man, I'm not a big pet person. But when those tigers, when they put their paws up at the top of that chain link fence, you think to yourself, that is what tiger is all about right there. And then the kids will run down the length of shrub, let's just call it 15 or 20 yards, and the tigers go to chase them. And you think, thank the Lord that there is chain link fence, because them tigers, you get a real healthy respect for because you never see tigers, right? I mean, who sees tigers? You get a real healthy respect for what tiger means. It's serious business. I wouldn't mind having a couple of those to play catch with.
Well, I think, write this down, folks. August 23rd, 2024, our producer Carter gave us one of the best
it's a good one
of all time, because Joe, you just earned the nickname Joe Exotic. You will forever be known.
I challenge anybody.
As the Tiger King, Joe Exotic now.
I challenge anybody. If you are not sure about tigers, take yourself to Michigan City or wherever they got tigers in your neighborhood and see them up close. And that is a real serious thing. You really like
tigers.
I don't know if I like them, but they look like a good time.
Yeah, I always wanted a shark. Like I always wanted a fish tank with a shark in it, which then as I got older, I kind of decided that's just a terrible life for a shark. Why would you do that to such a cool creature? But
you just have to get a really big tank.
Interestingly, we go with like apex predators, though, right? Like, you go with the animal that you normally wouldn't want to be found in the wild with, right?
Call your wife to the camera. I'll talk to her. Ask her about a big glass tank, and see if I can't get you a shark. You know what I mean?
Can we get production to get this guy some tiger stripes?
Can we get a tiger shark?
Suits?
We just combine it. There we go.
No, now you're onto something. I'm talking about you. I'm getting you cowboy boots, cowboy hat. You're going to be wearing tiger striped suit coat with tassels.
That sounds very interesting.
Have you seen Tiger King?
I know. I have no idea what you're talking about. I have no idea what you're talking
about. Okay. That's why this is not landing with Joe.
I have no idea.
When we get off this broadcast, you go ahead and look up who Joe Exotic is, and you realize that you just gave me
I have lived.
Beautiful, guys.
I have lived where people have tigers. There was a tattoo artist in Gary, Indiana that had tigers. There were people in a neighborhood that I lived in Indiana, southern Indiana, that allegedly had tigers. I never saw them. Do you know what I mean? Like what? Like how does that even happen?
No, I
Like,
don't know what you mean. I don't have neighbors that own tigers.
Wouldn't you have to get a permit? But yeah, I've seen people that had them. I'm not sure it's a great idea, but like you said, regardless of practicality,
you should hop on Netflix, go watch Tiger King. It's a wild documentary. Yeah, so Joe Exotic, everybody, joining us here.
Terrific.
At Zaner Ag Hedge.
Terrific.
Well, thanks for joining us, everybody, and listening to our Zaner MarketCast today. Right. If you need more because you just can't get enough of us, you can follow us on Facebook at the Zaner Ag Hedge or on Twitter and LinkedIn at the Zaner Group. If you have not already, check out that daily call in our Zaner Ag Hedge hotline. It's absolutely free. And our very own Ted Seifert gives you his best rundown of market price action every day. And this last week, we've been giving us some updates from the crop tour. If you've been listening in, been real cool. So thanks for that, Ted.
Thanks,
the best
Ted.
part, it's free.
It's free.
You can find up the signups and the links provided. Thank you again. Be sure to like, comment, and follow this podcast to not miss a beat. And we'll be back with you all as price action develops. Have a great weekend, everybody.
Thanks, everybody.
And we'll see you all next week.